All right, another test. Test 1 2. Test 1 2.
Test
Dennis.
1 2 3. Test 1 2 3.
Testing 1 2 3. Testing 1 2 3.
All right.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Connon.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to this Tuesday, April 4th edition of Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Connon and Dennis Dick. On today's show, a lot of earnings to discuss. Plus, we're gonna make our way through the coach and Domino's separate rumors, M&A rumors involving those two stocks, and we're going to try to cover as many ratings as we can. But we have two guests today, so it'll be a busy show. First will be at 8:15. That's Angie Setzer. She's the vice president of the Grain for Citizens Elevator. She's on Twitter at the Goddess of Grain. She's maybe our go-to commodities expert. And then at 8:35, we're going to be joined by Nick Shaheen, author of Create Income with Option Spreads on the Market 5 platform, and our options guru. Joel, how are we doing in the S&Ps this morning?
Not good, Spencer. Not good at all. We are down 10 points at 23.46 even. Never saw the closing price of 23.56, the high 55.50. Just a slow leak here, keeping an eye on yesterday's low, Monday's low at 23.40. Gold and silver responding like they should when the market goes down. They're going up. We have gold futures up $8.10 at 12.6210 here. 62.90 is what it hit yesterday, so that marks the high of the move. And silver way up at 18.40. Maybe it's time to take a look at my silver coins again, getting a little bit of a value back on them. There, the rally, the recent high of the move, 18.43. Let's see what we have on the daily chart. The daily chart, big wall, 4 highs at 18.50. Basis the front month contract. Dennis, a lot of red here this morning. Is it time to worry about Europe?
It's time to worry about a number of things, but it was time to worry about a number of things even during the last rally. So whether the worries continue or not, still to be determined. I mean, I look at Deutsche Bank. You made a good point. You know, they did issue the rights, and the stock fell about $1.50. You know, so you have to adjust really the price. I know your charts don't adjust for it, but you know they did raise some capital. But you know, you start analyzing. It's $16 now. Deutsche Bank. So it's starting to come down here. It's down here again. It's hitting, you know, if you're wondering why the banks are so weak this morning, I think it's Europe. Deutsche Bank's down 3.5%. Look at the other European banks down. Barclays down 2.5%. Royal Bank of Scotland down 2.5%. You can jump over to ING if you want. It's down 1.5%. Europe banks are weak here this morning. Our banks are weak as well. Bank of America getting downgraded this morning here at Citigroup there to neutral. So that's not helping BAC. Full disclosure, I do have a trading position on in Bank America, but all your other banks are down as well. If we look at Morgan Stanley, it's offered down pre-market. Wells Fargo, they haven't traded yet, but they are offered down significantly. JP Morgan is actually down significantly as well. It's not as bad as it looks for JP Morgan, because JP Morgan is ex-dividend here today for 50 cents, so 87.52 was the close. The adjusted close is 87.02, but stock is trading down at 86.40, so it's weak as well.
I think Bob Wire sold you that Bank America that you're long because he's short. And Bob Wire, you got any? Bob Wire, you got any targets for Bank America? I just want to point one thing out here on the Bank America. 25.80 down to 22.10. Your 50% retracement was 24.97 or 23.97. You put a double top in there at that area, and then you're down here knocking on the door at 23. And the reason I bring it up is it's hard to put Goldman Sachs and Bank America in the same category, but look how Goldman Sachs reacted last week off that low. Nowhere near 50%. I mean, you talk about just a dead cat bounce. I mean, this thing did go from 220 to 230, but nowhere near a 50% retracement. That would have taken it up to the 240 area. So little relative weakness in the Goldman Sachs and continuing lower.
And full disclosure, I am actually got a pair trade on, so I'm not all of a sudden, say I'm long Bank America. I'm not bullish Bank America here. I just have it paired up. I'm actually short Goldman against it there, and I'm short some XLF against it. So I've got a pair trade going on there, so that's something different. So obviously, it's not a call on the financials being strong there. It's just a call of some relative. It's just a pair trade. It's an overnight pair trade.
So did you put the Bank America on and then put the Goldman Sachs on, or did you do them?
It's a hedging thing. So I do a lot of different hedging tactics. So Bank America sucks that it got downgraded today. It's coincidental to me. Like I said, often I have 20, 30, 40 positions overnight. So the odd time I'm going to get, on one side where I'm going to get a downgrade that hits me. But I said like it works the other way sometimes as well, where an upgrade hits you too. So it's just coincidental is all it is.
Okay. All right. Now let's move on to some other morning movers.
There's a ton of morning movers here. I want to move to Kate because this one's interesting. Kate Spade is getting murdered here this morning. And if you're coming in, even on fast money, they were saying, I don't understand why this is trading down. I'll tell you why it's trading down. Because we were already talking about this. We've been talking and following the saga here for a while. Kate Spade was from Reuters. This was the initial report. It says seeking more time for talks after the coach bid. So it actually got bid up a little bit after that initial, article came out. And I was looking at it, I was like, why are they bidding this up? And I shouldn't have hesitated, and I did. And, then, boom, 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 they start smacking it down. But, maybe some people think, oh, it's got a coach bid, it's good news. But we knew coach was going to bid for the stock. We knew Coors, it was the worst kept secret on the street. They're in a little bidding war for it. But when they say they're going to seek more time after the coach bid, it's telling me, this is how I'm interpreting it, it's telling me that the coach bid wasn't that good. So if you're seeking more time, because if it was a good bid, you just take it. So all of a sudden the market's like, whoa, maybe, coach isn't giving a very good bid. If we think about this, when these rumors started, you can see how the spike in the chart. This stock was a $14 stock. You can see that day back on the 28th of December, we rallied from 14 to 18. Then we consolidated, more rumors. Everybody's waiting for this bid. First bid comes in. It doesn't appear to be that good. Stock getting hit now. And we warned our traders about this too on the pre-market show. We've been saying, you got to be cautious on this because I think a lot of this is all baked in. I even went as far to say on the pre-market show, I believe that, I'd be shocked if they got a bid over 25 and the thing was trading at 24. Now it's at 20. So I wish I would have shorted it on, just all these rumors here because sometimes it's good to sell on rumor or to just sell on the rumor as opposed to waiting for the bid to materialize. Because when it doesn't materialize or it's not that good, you see this happen in KATE.
And this is not a new trend. I think going back probably more often than not, when that initial bid, when that initial rumor comes out, for example, Humana and Aetna, remember that thing ran to 220? The deal got pulled out. And this thing's really clawed all the way back. And I know you had a trade on in this one when it was actually become official and you got out by the skin of your teeth. But, man,
Humana.
Yeah, Humana. I mean, just the expectations, for a retailer, too. I mean, Kate Spade, this thing, look where it's been historically. It's been up to 42.50, but someone wants to buy a retailer right now, hit the bid.
It does have the growth. And there was actually, Quote the Raven, who we've had on the show before. He was, saying he's coming in and buying it here this morning. He was saying on Twitter, I saw his tweet go by. You're listening, hi, Quote the Raven. But the reason he was citing is like it does have a lot better growth than a lot of the other retailers out there. This is one that's still expanding. So, there's that consideration there. So, so you come in here this morning, you got to reanalyze now. I would say, I'm looking at it from this perspective, and I think it's kind of, I'm going to sit on hands here almost. Because, okay, if coach bid isn't that good, and Cora says they're out all of a sudden, this thing could be back at 17 or 18 bucks. But, now there's upside here because maybe that coach bid was 22. Maybe Cora's is going to come in 23. Maybe you still get a 23 or 24 bid. So, I look at it here and I see risk return. It's kind of a coin flip for me. So I liked it short, up at 23, 24. Obviously, it would have been a good long back down at 18 before the big hype up. But when it's come back down to here now, 20, I think it's down to 18. I think I get interested in the long side again because I think there's still that possibility for a bid, and it's not as much downside if a bid doesn't materialize. But there's still some air below here. Now there's air above as well, though.
Yeah, well, we'll take a look. When the initial rumors started here, it was at the $14, $15 area. So that's where I would get interested in this stock, not touching the retailers.
Okay, jumping over here just to another retailer. Urban Outfitters came out last night. They're the ones still do comps, Spencer. They came out with the comps. Do you got those there for us?
No.
That sure is stinging. Okay. Anyways, the comps. I
Sorry.
had the comps. I didn't write it down though. So last night comps. I believe they said at Urban Outfitters itself was 3%, but their other two stores weren't that great. That as an Anthropology they own or one of those. I didn't write it down anyways. But comps not fantastic. That is why stock getting hit. And then this morning, Citigroup says, okay, we don't like those comps either, and they downgrade the stock to neutral. So you're looking at Urban Outfitters trade down 5% here in the pre-market. It's getting hit, and it's probably going to hit a few of the other retailers. Like we said, though, the retailers have already kind of been in, a world of hurt here. So I don't expect, just this huge retail selling off. It's kind of the same thing as who reported last week, Joel, there, and then they didn't really hit the retailers that hard on it. Was it? It was the Lululemon fall. I was
Oh
thinking
yeah,
about.
yeah, and I just want
Yeah.
to. Well, first of all, they may want to stop doing comps here. They just took the stock down to 21.54. That's a new low of the move. A little bounce here to the $22 area. I'm keeping an eye on the pair of lows here, right where we are right now, 22.06, 22.16. And boy, if you've been playing the bounce off Lululemon here, you might want to get a little bit worried here. We did get
No
a
such
bounce.
thing as a triple bottom.
Yeah, I don't know. What do you think about this?
Yeah.
50-50. Couldn't
Yeah.
climb over 52. Another washout. I bet you there's a whole lot of sell stops there. So we'll see what happens if it gets down to 50-50 today. And with the SPOOs down 10.5, we very may well.
Definitely concerning there. Like they always say, there's no such thing as a triple bottom. We see them every once in a while, though. So yeah, I'd wait for the level. $50. I mean, it has to hold 50. Even if it goes down to like 50, I'd say, because it's a decimal world, and there's always a shakeout through it. So I like to give myself a little bit of room. But I'm not coming at Lululemon and just trying to pick a bottom here, just because when I looked at it, valuation still looked expensive to me. So even though it looks cheap relative to where the price just was, from a relative valuation perspective, it's an expensive retailer still when you look at how the other retailers are being valued. So $50 needs to hold if the Bulls have any chance on this one.
Okay. All right.
Jumping over ratings parade here. Let's get a couple in just before Angie comes on here. Just want a couple main ones to talk about. NVIDIA. So looking here, this stock is getting downgraded this morning, or not downgraded. Yeah, it is downgraded to underweight at Pacific Crest, and they're hitting the stock pretty hard on this too. Actually, it's down $3.50 here now. So here's a stock been consolidation station here for a week and a half, just under 110. I don't know if there's a huge seller at the point, but whenever you see 3-4 highs just under the big whole number there, I think there's somebody probably lurking there, some institution probably selling some big stock. It's probably putting the lid on it at least short term. Couldn't take out that 110 seller. Now we get the downgrade. Now we're reversing off of it. Now it doesn't look so good.
Right, and yesterday's high, you can see the last three highs from 965 up to 110. Pre-market low. Now there ain't no bounce here. 104.80. That's the low of the pre-market session. Just hanging there. What bulls need to hope is that this spike low that you had well, it really wasn't a spike low. March 27th to 103.57. That's the first place I'd stick a bid out here in NVIDIA.
I always like to look at AMD here, and it often has a little bit of a sympathy move here. It is down 1.3%. Obviously, did not get the downgrade, so it's expected that it wouldn't be down quite as far as Nvidia. But AMD had actually been on a little bit more of a run. Its chart was looking a little bit better than Nvidia, where they had the 110 topping it. This stock actually was trying, to come back, and actually not that far from its highs. But you put a little double top in the last 2 days, 1475, 1474. Now you peel off that a little bit there. So I'd say 1475 is a bogey for me on the upside. Downside, it's kind of wide open because we run up for a couple days.
Yeah, you had to break out from the $13.85 to $14 area. So maybe go back down to that old resistance, new support.
Let's go grab Angie and talk some grain.
All right, we'll be right back with Angie Setzer.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Alcon, along with Dennis Dick and Spencer Israel, and we have Angie Setzer on the line, Vice President of Grain for Citizens Elevator. Angie, how you doing this morning?
I'm doing great. How are you guys?
We're doing good. I probably say this every time you come home, but every time you come on, but you met the king of corn on our show, Carl, correct?
Yes.
And now you
Yes.
guys have a little one, and did you name it either Joel or Dennis?
Those are his middle names. That's what they're what we call him when he's in trouble. So
Okay.
that's what now he's the little tiny titan of grain, and he's here with me today. So if you hear him chatting in the background, that's just probably him giving his opinion on what he thinks the market's going to do.
Okay, all right. So we had some USDA numbers come out, and let's just go through some of the big ones here. What were your expectations? How did they come out, and how did the market react? Let's start with corn.
On the corn side of things, we got the numbers that we got on Friday were acreage intentions. So what the USDA believes farmers are planning on planting this spring, and we also got quarterly stock numbers. So with the drop in corn prices compared to where soybean prices have traded, and cotton prices, things of that nature, a lot of traders were anticipating a fall in corn acreage versus a year ago. And they were right. They actually were anticipating about a 3 million acre drop to around 91 million acres of corn expected to be planted, and the USDA believes there'll be closer to a 4 million acre drop, so around 90 million acres of corn. So it's a lot of corn still. I mean, 90 million acres is a solid amount, but with it coming in a little bit lower than anticipated, that did help support the market, just with the thought process that a million acres of lower planting numbers equates to around 170 million bushel overall when everything's said and done. So that was a reasonable swing. Quarterly stock numbers came in a touch higher than anticipated, but a lot of times traders don't really take that so much at face value, simply because there's a lot of grain out there still, around 8 billion bushel. So if you're off 1% on 8 billion bushel, you're still there's still a reasonably large swing in what that could mean for overall ending stocks.
Yeah, now the monthly chart, doesn't look as great. I mean, it looks like you bottomed just over 300, but if you go a little bit shorter term, the daily chart here, after making that 314.75 low, seems like you've had a couple bumps and then a little rounding bottom, a little bit of trouble, a little bit of, bump up, a little bit of a rounding bottom here. Kind of looks like the same thing that you had here in mid-March. Are you looking for us to go up and test that spike high that you had at 386 and a quarter?
Yeah, I definitely am. I mean, we're watching the weather forecast very closely because that's really what is going to kind of drive this thing at this point. Right now, we're experiencing some wetter than normal conditions throughout much of the Corn Belt. It is a little early yet. It's April 4th. Over the years, a lot of times you want to be planted mainly by Mother's Day. So that gives us, another 5 weeks or so of progress or of a transition in the weather pattern that could equate to something totally different, than what we're expecting right now with the wet conditions. But at this point in time, we're really going to be monitoring weather, but I think that the thought process is we're still using quite a bit. We're going to want to be watching what's going on with South American production, but I am anticipating the market to test recent highs here probably over the next couple weeks or so.
So much for beans in the teens here. That's one ugly looking chart here.
Yeah.
Boy, oh boy, oh boy. We're just how many down days is that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 down days in a row trying to get a little green here. Give us your take here on the soybean market.
Well, yeah, soybeans are kind of in the situation corn was in a couple years ago, just in the sense that we went from incredibly tight stocks in the end of the 2015 crop year, 2014-15 crop year, going into 15-16. We saw quite a cut, when we saw the rally happen here a year ago. A lot of it came from a cut in overall global projections with the problems in South America. And then, of course, the U.S. that increased demand substantially, which cut carryout. So we saw that rally take place. This year now, the 16-17 crop year, it looks like our carryout expectations. Sorry, apparently he's very bearish soybeans. Our carryout expectations are likely to double versus last year. So that's pretty substantial to pay attention to. And then Brazil's had a hellacious crop year. I mean, they're looking at producing nearly 15 million metric ton, or over a 500 million bushel more of soybeans than they produced a year ago. And so the global pipeline is going to be pretty full of beans. And then, of course, on Friday's report, we saw a relatively large expected increase in soybean acres this spring to be planted. So the thought process is we could see carry out next year, go 5-6 times above what's thought to be the minimum pipeline level, and really kind of working its way towards burdensome. So the fact that soybeans are still hanging out well above $9 is actually somewhat surprising for some folks, but I think they'll probably maintain some support until we get into at least August and get an idea on what U.S. production weather looks like, just because the global demand for soy protein is so large, we really don't have room for a hiccup.
Yeah, I mean, this 940 area, boy, that was supported August and September of last year, also in July, going back to April of 2015. So that looks like a huge technical area here. Hopefully, soybeans can hold in there in 940. All right, moving over to another grain, wheat. What were your expectations going to the report, and how did it react?
Well, the thing that's really interesting about wheat right now is in the U.S., we have basically the lowest planted acreage, or the expected lowest planted acreage overall on record. So winter wheat acreage is the lowest it's been since 1910, and spring wheat acreage is expected to drop off pretty substantially as well, taking overall wheat acres down to, like I said, levels that we've never seen. So that's really shocking, and that tells you that low prices have a tendency to cure low prices. In wheat, it's such a global crop because everyone can grow wheat, and the old joke is that someone's harvesting wheat somewhere in the world at any point in the crop year. So right now we're seeing wheat kind of on the downside. We've seen confirmation that stocks are very large. A lot of our wheat is sitting in the hands of the Kansas elevators at this point in time. And so really with wheat right now, we're just waiting to see what that reduced acreage is going to produce. We're also watching what's going to happen in Europe, what's developing in Russia. Australia just had a monstrous crop. As we move forward, they're anticipating those levels to fall off production-wise into this next crop year. So to me, I'm expecting wheat to continue to maintain support at these lower levels, which is where we are. We're at least well off the 360 something we saw the market dip down into here at the start of the year, the late point of last year. But I'm anticipating wheat to try to pull itself up and hopefully we'll get back up into the fives. But some folks will think I'm crazy for thinking that.
All right. What about the new administration? I mean, you've had your Trump stocks.
Yeah.
I can't say there's really been too much about helping out the farmers. I don't know how the farmers voted in the last election here, but do you see? I mean, he talks about trade policies. Is that something that if he really implements, the direction he's talking about going, is that something where, hey, maybe we're just we won't have to battle as much imports? Do you see any policy changes in the upcoming administration that may benefit the farmers and the crops?
It's hard to, at this point in time, it's hard to put into words. The healthcare debacle that we're seeing going on right now has really been a struggle, and that's been one of the things. A good percentage of farmers out there will tell you that the healthcare costs are one of the things that are keeping them up at night. We have low grain prices, and a low return on their investment when it comes to actual farming here. And their healthcare costs have increased, 3-4 times what they were 5 years ago. But the problem is right now is the bills being introduced don't really look to do anything to solve that problem. So, the number one thing farmers are watching or what they voted or why they voted for Trump in that direction is the healthcare side of things. The rollback in regulation will be nice. The waters of the U.S. has been somewhat concerning for a lot of farmers. So there's signs in that, not because farmers want to go out and pollute groundwater. I mean, they have to drink it right with the rest of us. But there's been some hands being tied with some of these regulations that have been put in place via the EPA. So that is something that's beneficial. But I'll tell you what, we're really going to be watching the meeting with the Chinese president Thursday and Friday of this week. China imports 1/4 of all of our soybeans. Over 1 billion bushel a year of soybeans are sold into the Chinese market. So that's huge. We're definitely maintaining, we're keeping an eye on what's going on with Mexico. They are our largest corn buyer. They're also our largest pork consumer from an export standpoint. So there's a lot of things that we're watching on the trade side that are quite concerning. That some may say will benefit the manufacturing industry, but agriculture has really benefited from some of these free trade policies, and so the concern is there that we're going to see that shift happen, and we're really going to be watching that.
All right, one more thing here going on policy, and this may be a little bit of a stretch. I think I read that some of the farmers in California, this may be more applicable to the fruit crops, are just not getting the workers that they need to get the crops out of the ground. I mean, is this something? I mean, I don't know.
It's huge.
Yeah. Really, in the Corn Belt, really, that's something that could be a concern if they can't get these crops out of the ground.
Yeah, I mean, with grain farmers, it's not as necessarily human labor intensive, simply because we have the large equipment. So your grain farmers, your corn and soybean and wheat farmers don't necessarily see that, but it is something that's going to be monstrous for agriculture. You just have to get in your car there in Detroit and drive west about 120 miles, and you'll come into Fruit Ridge, and you'll discover, talking to the apple guys and the produce guys that are over there on the west side of Michigan, and they'll tell you flat out, one of their biggest concerns with this administration is, a lack of really kind of reforming the worker visa program and things like that, because we really are lacking good, solid help on that side, because there's a lot of produce growers that will tell you that the migrant workers are a necessity to getting the crops out of the ground. And there's been a lot of food waste over the last couple of years because we've been unable to get the workers that have been needed.
And finally, you got to talk about implications for the stock market. You look at your John Deeres, your Caterpillars, your Monsantos, your Potashes. Any stocks on your radar?
Well, yeah, I mean, we're, of course, we just saw some recommendation of looking at buying some Dow stock. I just saw that the other day. I thought that was interesting, because you've got the Dow DuPont mergers taking place, Monsanto Bayer. Of course, you're kind of keeping an eye on what's happening with those. John Deere always concerns me until we see a run-up in grain prices, just because there's some issues developing with their lease program. What's going on with the oversupply perhaps of used machinery, things of that nature that are coming in, because farmers aren't going out and buying new stock. You've seen Titan stock fall off pretty substantially. They're a tractor dealer out here in the Corn Belt that grew very, very quickly, and then kind of have really suffered with the downturn in ag. So, of course, you always want to watch your seed and chemical suppliers, because they're a necessity. Farmers have to plant the crop. And then you want to keep an eye on what's going on with your mergers and acquisitions in the industry too. And every day there's a development in that, it seems. So we're just always watching. We like to keep an eye, like I said, on John Deere, just to get a feel for overall health of the ag sector.
Angie Setzer, Vice President of Grain for Citizens Elevator, also a great follow on Twitter at the Goddess of Grain. say hello to the King of Corn for us, and maybe we'll get you guys back on to maybe if you got a little debate, we'll get you guys, and say hello to the little one as well. Thanks for coming on, Angie.
Thanks for having me. I always enjoy it.
All right, little bounce in the S&Ps here at 831. We made a pre-market low of 2344.75. I have absolutely nothing at that level here. Monday's low 2340. So see what happens if we could get to that pre-market low. Dennis, 831 here. Imbalances, any initial imbalances?
The balances are small, but it's early. This is just the initial, so I imagine most are going to flip to sell. I actually see some buying balances right now, but they're so small, they're so early. Hard to even give these, Wells Fargo 42,000 to buy, but that's, it's so early. One institution comes in, and then it's going to be a selling balance too. So I'd imagine most of these are going to go to sell. Nothing really standing out there, but what I do want to do is jump over to the ratings parade because Spencer, holy cow, there's a lot of ratings changes last night. Where do you want to start here? Because I've got about a dozen on my list we could talk about. Obviously, I'm going to have trouble talking about that many in 3 minutes before Nick comes on, though.
Yeah, well, I mean, you already mentioned NVIDIA. We had Panera downgraded this morning too from Baird, downgrading to
Let's talk the Panera, because this was a story that was broken by Bloomberg yesterday, that they were potentially putting themselves up for sale. They were citing different suitors. There's a couple different suitors. I heard Starbucks, also heard Domino's Pizza, and then Benzinga came out and they called Domino's, and Domino's did tell Benzinga that they are not, interested in purchasing Panera. So they are not one of the suitors, is what Benzinga found out. Stock actually came back down a little bit after that report there for Benzinga, but still, if you look at it, it's well above where it was trading yesterday.
And Domino's saying, this is from them, we have consistently said that we believe the pizza industry has a lot of room for growth, and we are committed to remaining a single-brand pizza company. So if you believe what they said, don't expect any cross-channel M&A anytime soon.
Do we know why they were downgraded today? Was Baird that downgraded Panera today?
It was Baird downgrading to neutral, but they did raise the price target up to 290.
Okay, so maybe just buckets of profits.
Oh, it hit 292 yesterday. Wow.
Well, they're out.
I wish I could do that. I don't know, man. I mean, what a run. If you're thinking that, you're bearish, Panera here, it breaks out of that all-time high, goes to 292.42, and then pulls back. I keep an eye on that closing print of 82.63. That's the all-time closing high. Dennis, if you had to own one stock and it was either Panera or Tesla, which one would if you had to buy 100 shares?
Panera all the way. Panera all the way, I would. Yeah, you know what? Because actually, Panera makes money. Panera, the valuation's crazy on this one too. So I'm not thinking either of these in my investment portfolio. They don't follow my value and type of investing, but. I'd take Panera. I mean, Tesla, and people are calling this. I saw Steve Scott Redler calling it the Amazon of the automotive industry here. So, that's Tesla. You can't argue with the move here. I'm not shorting Tesla up here just because everybody loves it right now. This thing almost hit 300 yesterday. We talked about it on the show, saying 300 probably becomes a magnet. Probably still is a magnet. Got to 299 yesterday. Wouldn't be surprised if it does take out 300 there today. But wow, been an incredible move for both of these stocks.
All right, we are going to bring on one of the biggest Tesla bulls on Wall Street. That's Nick Shaheen. He's an options expert, author of Create Income with Option Spreads. Nick,
that's me.
Yeah, Nick, did you hear how I introduced you?
No, I didn't. I just I don't want to be on when you guys call me so we don't have feedback.
Because I called you one of the biggest Tesla bulls on Wall Street.
Hey, I'm definitely not a short Tesla guy. However, it is an impressive move. I mean, it all depends on what your macro was, what your thesis was. As a car company, I didn't like it at all. I said that, I think, last time. But if you address it as whatever company they think it is, then the way I'm bullish about it is you cannot refute the fact that it can't succeed down the line because it's no longer to me, it's no longer a car company. And the street is looking at it that way. So it's kind of like the Donald Trump rally. You can't say it's dead in a week. You have to give it time because it's complicated.
All right. Now, I know you sold some long-dated puts or put spreads, and I was looking at this and I'm like, oh, I'm always scared about selling puts. I'm thinking, oh, maybe I should just throw some Lotto 300 calls in there and it I think it actually gapped up the day or the day before that you did that. I never did. So is this, selling these outdated puts or put spreads? I mean, are you booking them here, or is just just something you're
Well,
going to let sit another? Because it's a big move. I mean, it's moved up 25 points, 30
yeah,
points since
yeah,
you put
but
out your
I didn't
recommendation.
close it, and I'll tell you why. I'll tell you what I did. I sold November 195 puts and collected almost $11. And that's a lot of premium per one contract. Now, selling naked puts is really dangerous because if it falls to zero, I lost $195. So basically, I'm committing to owning that stock at 195. And the reason I did it is because apparently it has fans around 200. Everybody's convinced. There's a whole gang that are convinced that they will buy it at 200. So, but I didn't just do it naked like that. What I did is I bought myself some easy sleeping time through June by buying the 185 put for $150. So even if it falls to zero, now my liability is only $10. So I kind of stopped the bleeding in case markets completely crash through June. So now the decay on the $11 is down to $5 to buy back, $5.35, while the other one is almost dead, but it's the protection is still there. So if I close both, the net is still very positive. But I also repeated the process at 185 for September, and that's also up $2. So $3, maybe two and change. So I didn't just completely go selling naked puts
Correct.
naked. It's kind of like selling a diagonal.
And Nick, that's why I love your strategy because so many people, go out there and they'll just sell the puts naked and say, "Well, I want to buy the stock there anyways." But a lot of times, what happens, they sell a little bit more than maybe they really want to own. If something happens, with that specific stock or the market crash or a flash crash or something happens, that's where you could blow out an account if you're getting obviously too many options sold, more than you could be biting off more than you can chew. So that's why I love the way you do it. Is you always protect yourself just of that, you call it like a fat tail in statistics, just of that anomaly, just in case something crazy happens, you're protected. Sure, when stock lose 10 points, but you're not going to lose 195 points. You always protect yourself. And that's key, and that's what I think a lot of people forget to do when they're selling options.
Yeah, and I'm really conservative guy, and it doesn't sound like it when I'm selling naked puts, but I'm not really. I'm covered through June. So I am committing to owning it, but not really, because I also own the right to sell it almost at my exposure. So, and by the way, I wouldn't short Tesla right now because this is a chart that I drew before with the yellow lines with the upside potential. So technically, there could be more upside to come. So if I'm looking to short it, by the way, I looked at selling the calls, and over $400 it pays 6 per contract or more as of yesterday or the day before yesterday. So the upside premium are pretty crazy. But once the fanaticism dies over a little bit, or abates, I shouldn't say die, I don't know if it's going to die, I may decide to sell a credit call spread or turn it into an a strangle strategy opposite of what I just shared to see, but I don't want the headache right now, so I'm happy with the profits on the downside.
Caterpillar, Ed Parker wants to know about this one from the chat. Actually catching, it's getting added to the conviction list at Goldman Sachs this morning. Cat is trading up $1.50 on that, 93.68. So Goldman saying, that they, are obviously looking like a cat down here as it sold off a little bit recently. What's Nick Shaheen think about the cat?
It's funny because I make great calls on cat, but I don't play them well for myself. I'm always better telling other people what to do with it. I don't know what. It's something emotional with me on it. Lower highs knocking on the floorboard. That floorboard better holds, or 87.50-ish, 88 could come fast. And that's these are weekly candles, by the way, I threw in there. So it is a point of contention just below here. What's it doing this morning? I'm not sure. I don't have it in front of me.
It's up $1.50 on the Goldman Sachs.
Okay, so there we go. Bouncing off that floorboard. So it's holding for now. I wouldn't chase it past the recent spikes. So, but Caterpillar is a quality company, and if we're not going to fall as an economy tremendously, then selling put spread in it is definitely doable. You just have to do your homework, finding levels that have been proven as support and hide behind them.
All right, let's move on here. We did talk general market at all here, Nick. Let's go to the S&Ps here, or Spider. I know you like to watch the Russell. We had that big break last week, recovered, kind of struggling at the 50% area, which is 2357 basis the S&P, the June S&P. What are you looking at here in the broad market?
Well, the S&P is range bound, obviously, and this morning we're testing the lower end of the range. I just posted a chart on it. I keep my lines as long as I can, just because it's good to refer to something that's familiar to everybody. So when I keep sharing the same charts, the patterns pop up. So it is important that we hold here. Otherwise, we could revisit the 20s, 2320. We had a date with 75, 72, 23, 72, 75 in the ES, the E-minis on the S&P. It didn't come, but maybe they could still do it. But they have to survive this morning. The banks are important, so you have to watch the banks because I think not technically, they're under pressure this morning from Europe. I saw some European banks not too happy. So the banks are important, and FANG is important because they are incredibly performing very well. And here are the banks, to give you an idea. So this is how I look at the world. I just have to see what's playing out, what's driving. Oil was important, but today oil is green this morning, yet we're not doing very well as an open indication. So all these are factors. You have to weigh them all together and see what are the catalysts down the line that will affect these. So I have to watch rates for the banks. I have to watch the headlines for the banks. And we have the jobs coming. We will get ADP, I believe, tomorrow morning, kind of a preview. I'm not sure what the markets expect. Is it good news, good news, bad news? I don't know. But what I do know is the range, and I should be ready for both scenarios.
Nick, let's jump over to Google here. They are getting downgraded this morning at BMO. Goog had a pretty good day yesterday, giving almost all of it back here today just because of the downgrade here. Let's go GOOG. What are your thoughts?
Well, it's weird that nobody talked about it. It had a 1.5 performance% on a struggling day yesterday, kind of a deal, and nobody talked about it. It had upside technical potential from a couple of lines with a sloppy neckline for the upside, but it failed last week to get there. Sorry about that. So what's it doing this morning? The Google as a company long term, it's one that I would do what I did with Tesla. If it gets hammered, I would sell the credit put spreads in it or even puts. But I have to pick my points. And if I don't have an obvious point, I don't do it. So short term, it has support, but it's not that strong. And sometimes when markets fall, they treat Google like a Momo stock. So they sell it. I've seen it sell 3% on a down day alongside of frothy names or perceived frothy names. So the easiest way to trade Google really is to go way out in time and sell a credit put spread in Leap that delivers 15% without me having to revisit it. And I'm talking like next January or longer.
Let's look at another big guy in there, Apple, which we know you look at every single day. And this stock is in consolidation station here right now. Last two candles, almost identical to each other, really. They're just, it was a tighter range actually yesterday, only trading at a 1-point range there for Apple. What are your thoughts here? It's had a big move, and now you've had 2-3 days kind of just digesting, almost like a little flag there. What are your thoughts on Apple?
Apple is range bound. I sold an iron condor on it basically for this week for fun. And it is, I'll show you the levels. It had a step up, and now it's stuck in that step up, which is not bad, all-time high to be stuck in. It had a longer term date with higher prices based on a breakout. But I'm not a hardcore technician. I respect those who are. And you have to zoom out to weeklies or monthlies to really appreciate the long-term value in Apple. Now, you've heard me say this many times on Apple, is I think Tim Cook will break it because not that he is not smart. It's because I think it has to do with courage. I'm not sure what it is, but they're doing some stuff that doesn't impress anybody. Like, where is the next big thing? We used to wait for that all the time, and now we don't anymore. They don't even mention it. They just talk about when is the rollout of the next phone and what color it's going to be. So here's a longer-term look on Apple. I think these are weeklies candles. So yes, it had potential, but I'm not chasing that potential, but I do value it for now at where it is. So I can probably sell some premium short-term to try to make 20% or so, but I have to be actively trading to do that.
Jumping over to the chat there, DC wants to know about ARLP. Not a stock that I follow, but Alliance Resource Partners, ARLP.
Seems like I'm not sure what it's doing this morning. I always preface that now because I got caught a couple of times with that. I talk about a level and it's moving 20% pre-open. It is a level of contention now. Coming back to it, it showed like it kind of broke a lower high trend of late. So let me see if I can place a line there and share what I'm talking about. But I wouldn't short it right here. And in fact, if somebody's long it, they could probably let it run a little bit to see if it can overcome this level of contention here. And if so, it might gather some legs. Here it is. So don't know the fundamentals. Technically, I have no reason to short it. If I'm long it, I'll let it ride. I could probably start long here, but if I'm afraid of to be too long, not knowing how strong a resistance area that is. It's a pivot, support at once, resistance at once, then support several times, and now is it going to be recovered to be used as support for future higher highs?
A lot of highs here, just under $23, $22.95, $22.80. You could just count them up here. Even give yourself a little bit more room. $23 clearing the $23 level in that one could be a good trade.
I agree, and use a little longer dated, like May calls or longer.
How about Home Depot?
HD. Let's see here. I haven't looked at it in a few days. Ooh. Okay, it better hold. First of all, it had a technical pattern that it fulfilled completely, but now it has the opposite situation where it needs to bounce here. Not sure what it's doing this morning, but there are a couple candles that worry me that were fast, like leap up and get up and go to fulfill the last promise of the technicals there. So give me 1 second and I'll get you going here. HD.
146 just looks huge here.
Yeah, and the real estate market, at least people are working on their homes where I live. So I'm not sure what kind of competition it has with Lowe's, but when I go to Lowe's, it seems like there's nobody there. So I get a little better service. But when I go to Home Depot, by the way, true story, I recently had to replace the pressure gauge on my house, and I went to Amazon, the Home Depot, right? So I shop for the regulator on Amazon. I find it kind of the same one that I have, about $75, $80, but then I ended up buying it at Home Depot for $90, and I bought it online. They said the person pops up while I'm shopping. I didn't even give them my name. It took my name from the credit card I used. It was so fast, and then they said, "What time would you like to pick the part up?" And I was like, 2:30. They said, "Okay, 2 o'clock comes, I get an email, your product is ready." I go there, they have a counter, it's got my name on it. It's like 2 minutes. I was in and out. It was perfect. So I like the company. I'd buy the dips. But here I'd wait out.
Yeah, 146 looks huge here. One final one here before you let you go, Nick. EVH, Downward Dog, is looking at this one. Pressing up here. Evolent Health Inc. I'm not sure what aspects of the health industry that they're in, but let's take a look at that.
Is it moving pre-market?
All right. Nick, you're not going to get caught here. Let me see.
No.
EVH, I don't think so.
Okay,
No trades.
technically, I would not short it. It has, I don't want to call it inverse head and shoulders and be caught by technicians who are sticklers about it. But I do see some upside potential. But, it is kind of getting up there. So I don't know the fundamentals. Somebody who does might know when to get off that long bus. But if I was long, I wouldn't be pressed to get rid of it. Maybe I'd trim a little bit. But it is pretty constructive price action here.
Nice looking chart. All right, we've been on the line with Nick Shaheen. He's the author of Create Income with Option Spreads. Joins the show every Tuesday at 8:35. Nick, thanks for the input. Thanks for the charts. We'll have you on back again soon.
Looking forward to it. Thank you.
All right.
Thanks, Nick.
S&P's off the mat here, 2347.50. Still down 850 on the session. Gold, silver, and crude all in the green.
Yeah, so and it's the same thing. We haven't really moved much here. We're weak overall. We talked about the banks being very weak here. Obviously, the Bank of America downgrade here today. If you're looking for any source of strength, and there's not a lot here today. We talked about Caterpillar already with the conviction list move at Goldman Sachs. It's one of the reasons it's trading up. But really here, the market looks like an obvious risk-off day. So, you start thinking defense. Gold is obviously trading higher. But, I always like my food stocks. We do have, some analyst action there in the food stocks here as well today. Also, sometimes your AT&Ts and Verizon, sometimes these things open weaker, but they actually seem to do better sometimes on some of these weaker days. So just watch. Market might be playing a little bit of defense here today.
All right. We were talking about the ratings, and we got through a few of them, and then we went over.
There's a lot of them, yeah. So Nike, here's one. Nike downgrade at Argus here today. It's traded down to the pre-market. It's down about 30 cents. I'm not down too far here. Also, L Brands downgrade at Citigroup. So you got two retailers here getting downgraded. Maybe just jump into the technicals on these two retailers.
Nike NKE, if you're listening on your mobile app here, came down hard off the $59 level. That was due to earnings. Went under 54. Didn't quite do that 50% return. Well, let's see, 59 to 54. That's 5. That's 2.5. It did. It exceeded it by a little bit. Went over that 56.5 level. Failed at the whole number of 57 here. I think this thing needs to get back over 56.5 in a hurry. If not, you're going to be going down to test that low from the earnings day. That was just under $54. It's interesting how you have those real bad days and a stock bottoms just on the day of the bad news. That low on that day was 53.76. That coincides with another low you had at 53.93. L Brands here.
This one's ugly.
Really? Ooh.
I have not looked at this chart in a couple of weeks, and it just continues like this. Trend is your friend, and holy cow, it's not your friend if you're long on this thing. This thing went straight down for a year and a half now.
45.76. That marks the low of the move. What are we doing in the pre-market trading? We've hit 44.90. I'm not sure if there's any volume associated with that trade.
But Citigroup, it's downgrading it, so it's probably down 2%. So wow. That's usually a Citigroup downgrade. It's worth about 2%.
Taking a look at the monthly charts here. If you've been in this for quite a long time, you're not too happy compared to the relative market here. The downgrade today. Let me go to my monthly charts, and oh boy, you're breaking a triple bottom of support at 46. That's what you did yesterday. And boy, oh boy, I can't even find anything. Your April 2013 low was 41.52 here, but don't think we'll see that one today. Another stock here from DC1. I'm not sure if we have any news on it. I don't even know what the stock is here. AYI.
Let's get murdered.
Really? What's going on with Acuity Brands?
Spencer, you got news on this one? AYI down 10%.
They had earnings about like 20 minutes ago.
That's ugly. So this is one of your. If I go to my loser board, this is right near the top. At least of the bigger stocks. Obviously, often your loser board has some penny stocks in it, but it's right up there. It is actually number 5, despite $181 stock now here, close to 204. So they are whacking this thing. What were the earnings?
The EPS missed by 6 cents, $1.77 versus $1.83. The sales missed by about $24 million. 804.7 was the actual. 828 was the estimate. $1 million.
Well, since you've asked if there's any further downside, it's went from 182 to 179.74, 178.61. So yes, I do see more downside in this one. If I had to throw a level out here, one, I wouldn't touch this thing until 170, 169.42. That was your low in February of 2014, 179. 179.01. I mean, if you're short, throwing bids out at the half and whole numbers might be recommended. If you're waiting to get long, maybe give it another day or two to shake out.
Well, I mean, that's the whole thing. People, this is a good time just for talk strategy just for a minute. People naturally, this is, especially if you're new to the market, naturally see something down 10% and you want to buy it. You're like, oh, it's so cheap, it's going to come back, And the better solution, sometimes these, you look at the L brands, chart there, and that's just been continuing to leak down since they reported. I mean, it did have a little spike afterwards, but it's a scary thing when you don't have any, reference point. I always like, the first day is like price discovery. I like to let the thing digest. Maybe, and you taught me this too, like maybe put in a low, and then you have at least a reference point. But we're cutting through all the numbers here, and when you start cutting through all those levels, who knows where the thing can go. If you go out to the weeklies, you can see some support down in the 169, 170 area. So maybe if it got down to there, maybe that's a spot to take a shot. But it's still digesting here. So it's better, a lot of times to sit back, let it digest for a day or two, let it put in a low, and then maybe you have a reference point if you're trying to look and pick a bottom. But more often than not, after a disappointing report, these stocks continue to leak.
And for example, here on this, what is it, AYI. I mean, this stock, it did peak at 280.89. It had come off that level. But there's a lot of investors here. Just think of all the people that are in this thing under $100. Well, yeah, maybe they missed the 280.89, but maybe there's like, okay, this thing, if it hits 180, I'm out. They left some money on the table. But that's another thing that you're competing with. You're competing with all, the investors that were in long ahead of you. So when you're just looking to, buy a bounce or something, there are probably other people that have bought this, real quick. Market makers probably get caught this thing, that if they're dangerous enough to be making a market in this thing during an earnings. But right now, 179 is a low, close to your psychological 180 level. If you're looking to do a shorter term, always keep an eye on that pre-market low and see how the stock reacts off the opening bell. Dennis, 1 minute here before Spencer wraps up the show. Anything else you'd like to add?
I wanted a balance update. Anything
balances?
Changed? Yeah.
Okay. They're all still a little bit to the south side. Like we said, Wells Fargo is actually still 31,000 to buy. It's one that's trying to be pesky and hold up. But I think one institution is going to come in and say, you got them, because all the other ones are so weak. I know CBS. CBS is down 58,000 or 58,000 to sell. That's somewhat significant. Walmart 34,000 to sell. Again, I'm looking to play defense, so that might be a stock that I might actually be interested in buying if it opens a little bit too weak. They're all pretty similar. Hershey's, this one stands out. HSY, not a stock that usually has a big imbalance, but it does this morning. HSY 45,000 to sell off the hop, and that's significant because usually food actually holds up a little bit better. That's got a significant sell-off balance, so that's one I'll be eyeing here today if it opens too low.
And look out for that seller at 110 in the maker of the Great American Chocolate Bar.
Oh man, that 110 level's been huge in Hershey's.
All right, what do you got for us, Spencer, for tomorrow?
On the docket tomorrow, we've got Paul Henneman from Value Engine and Hema Reddy from the trading methodology of WD Gann. She's a new guest. Did you meet her at the expo?
I did.
You did?
I did.
Okay.
Very nice young lady.
Great, excellent. And I think she's from Maryland, so I like her.
You got another Terp on there.
I like her already. All right, that's our show for the day. Hope you enjoyed our chats with Angie and Nick. Please remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. Have a good rest of your Tuesday. We'll be back with you folks tomorrow.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.